Okay guys, so just like the dollar yen, we're now looking at the euro yen. I'm here on the 60-minute chart. If we zoom out to the 240 or 4-hour chart, we're gonna see that the euro yen is setting up much like the dollar yen. There are slight differences between these pairs. Some people don't like to trade both of them. Some people like to trade just one at a time. So certain patterns will complete or not complete depending on which pair you're on. For us, we found the exact same pattern also on the EURJPY. You can see here the A, B, C, D pattern. So let's delete these lines and we can take a look at how this pattern came about once again, just really quickly. So we identify our swings. We're going to do a Fibonacci retracement from the A to the B leg. We want to see the B to C come down to around 61.8. This one crossed a little bit. For me it works, for other people it might not. Then what we want to do is we want to draw in our A to B line and bring it down to make sure that that line is symmetrical for the C to D leg. So you can see here that the market came up, touched one of our structure zones, or getting close to it, and then came down. I front run my orders, so my orders are slightly ahead of where I would want to take this trade. Because of that, we barely just got filled, coming down already up $200 or about 9 pips or so. So we're going to keep watching this market as it comes down. Our targets, I've chosen to use structure targets here because there is a lot of structure in this area. So let's find some confluence. We want to do a Fibonacci extension from the A leg to the B leg, bring it down in. This comes right to our 127.2. Then we'll do an extension from our C leg to our B leg. It's a reverse extension. That gives us our 141.4. Let's remove everything that's not relevant. So let's zoom out a little more here and see if we can find any more confluence zones. So right away we can tell that there's not as many confluence zone as there is in the on the USDJPY. We found a zone here. So this whole area right here is very choppy. It was some sort of channel before, and you can see that the channel broke out down to the downside. So these choppy channels are really great to identify where the breakouts will be, but then they kind of mess up your Fibonacci's because you're not sure which peak to take. Normally, I think every single one of those peaks is totally relevant for Fibonacci's, but what we did was for this last Fibonacci that we drew, we took this leg right here. Now this leg actually bounced off of a very strong zone. We've seen this zone tested again and again, so we're going to really pay attention to that zone. And then the Fibonacci retracement goes to the top of that swing. We can see that the 382 lines up right in that area, actually right at our ABCD pattern. So we're going to remove everything that's not relevant. And now we're going to wait and see what happens to this price here. Another thing to point out is the divergence. So looking down here at the divergence, you can see that there is bearish divergence. Let's make that red. You can see that there's bearish divergence, which is one of our qualifiers to let us know that yes, this market is now losing steam and is about to roll over. Okay, we'll be back with more updates. Okay guys, so another update here on the EURJPY. We can see that the market is starting to roll over nicely in our favor. We're up about $680 or so and climbing. So far right now, any resistance that we're expecting are in a couple places structurally. We're expecting some resistance right here at the bottom of this previous small structure, but these are very small structure points inside a very large pattern. We're going to take note of them, watch them, but we're not going to make any harsh decisions off of them. So from the body, from this body to that body, that's where we're going to draw our zone. We want to see the market come by and pass by this zone. So let's turn this yellow because it's just cautionary. And what we want to see is this market make a new candle within this zone, hopefully below the close of this candle, and then start to swing downwards. We're at the 15-minute. If we go down to the 5-minute, things get a little more hectic, a little tougher to see. There's more candles closing. Obviously, there's more movement. I like to come up to the 15-minute just to make sure that when we're inside of a trade, we're not making decisions off of 5-minute dojis or candles that give us the impression that the market is about to turn around. Now, even if it does turn around, we are really not that worried. So for example, what we want to do is we want to follow our Fibonacci's. So we'll do a Fibonacci retracement from that low to this high. We can see that this market is more than likely going to experience some sort of pullback at the 382 level or at the 618 before coming down. Now our targets are based on, you can do two ways. You can go for very large targets based off of the entire pattern, meaning target 1 here at the 382 and then target 2 here at the 618. For me, that's not going to work. That's a little too risky. I don't really need to be waiting a couple days for a trade to finish. More often than not, I like to take the C to D leg, do a retracement off that, and then play off of my 382 and 618 zones. Unfortunately, these zones right now are lining up at the bottom of my structure levels. So I'm forced to take my profits right above these levels. So these are really structured based targets, not really Fibonacci's. But you need to know and be aware of Fibonacci's so that you can see, okay, is this market respecting Fibonacci's today, or is it respecting structure, or is it respecting both? We need it to close below this area right here. Now, for some people, this might be a good area to take your first profits. It's literally just crossing the 382. We would expect a pullback up above this level into the 382 again, and then a drop below this structure level. So you need to have some patience. You need to stick to whatever your strategy is. Right now we're up about $770. So we're really looking to take profits somewhere around the $2,000 mark. Take our first positions off there, and then we'll leave our second position down at the second structure level. As soon as our first position is hit, we move our stops down to break even and make sure that we're not going to be losing any money if the market decides to flip around on us. Okay guys, we'll come back later and check on the status of this. We're back at 243. We're looking at the euro yen. You can see here that this area that we drew before is being respected by the market. We saw a little pullback, and then the market literally just flopped over. We're still up over $1,000. At this point down here, we were up about $1,200, $1,300. We're expecting a slight pullback now that the market is bouncing off of our 200 SMA. Once the market breaks below that, we can expect our target ones to be hit. We should be filled on that order. We bring our stops down to break even, and then we walk away. Okay guys,